What is going on, investors? Hopefully guys are doing well out there. If you own Pinterest stock, you had a little bit of a roller coaster day. During the regular session, this stock was down 10.3% after Facebook laid an absolute brick on their earnings call last night and brought back the entire social media and online advertising sector. But after reporting earnings in the aftermarket, Pinterest is up 19%. So man, you're whipsawing on this one. And when we come and look at this from a technical perspective, you will see a little bit of a bounce off an area of support. Now, look, if you followed this channel for any length of time, you know I've preached invest in the gold medal winning stocks, the Facebooks, the Googles, the Apples, the Amazons, the Microsofts. Let's invest in the power, the dominance that this market has. Well, you might ask yourself, why do I got to sit through a video on Pinterest? Well, if you're going to invest in the fringe, if you're going to invest in the silver medal winners, the bronze medal winners, and I think we can all agree Pinterest is never going to have the revenue that Facebook and Google has. Well, if you're going to invest in these companies, get it at a steep discount, and that is exactly what we're starting to see with Pinterest. Over the last year, this stock's down over 60%. And so yes, now we're starting to pull back into an area where we might be able to make sense, not only from the valuation, but also make sense that, hey, we could maybe add this to our portfolio because we're starting to actually get good value on this stock. And certainly when we saw the results from Facebook, that might lead us into more silver and bronze medals in this space as the gold medal winner starts to slow down. We'll talk about that and more on today's video. Let's jump into the numbers. Pinterest's Q4 came in. They came in at $846 million worth of revenue, good for 20% year-over-year growth on that revenue side. They beat expectations by nearly $20 billion. And this 20% year-over-year revenue growth actually meets what we saw out of Facebook in the most recent quarter. It doesn't get up to where Google is, but look, this company, again, is always going to be kind of a bronze medalist or just off the podium in terms of online advertising, but the fact that it is keeping up with Facebook in terms of that revenue growth is actually pretty exciting for shareholders. Now, when we come over here and see the mix, what we saw is that the revenue growth came in overall at 20%. Here in the United States, just 11% growth. Internationally, they're growing 61%. Now, in terms of their user mix, it might come as a surprise to some that this company actually has far more international users, monthly active users coming in at 346 million, just 86 million here in the United States. We actually saw that decline across the board, and it accelerated quite a bit here in the United States. That's a little bit disappointing because the average revenue per user here in the United States, look at this, it's actually pretty impressive. Over the last month, they earned $7.43 per average revenue per user. That's 25% growth. Now, you see in their international, we talked about how they have way more. We're talking about 346 million international users, but we see that those users, Pinterest makes far less on an ARPU basis, just 57 cents, but that was up 62%. So as this company continues to monetize their platform better and better, they can make up for the fact that they might see some drops in terms of monthly active users. At least at the current time, Pinterest is showing that they can monetize the users that do stay on the platform far better when it comes to an ARPU perspective. Now, in terms of valuation, let's take a look at Pinterest. Okay, it's here in the orange line. This is a price to sales. I'd put up price to earnings, but Pinterest doesn't always make a lot of money. And when you look at Snapchat and Twitter, it's kind of the same thing. So it's better to look at a sale. And quite frankly, a sale at Pinterest is almost identical to Twitter, Facebook, and Snap. All these companies basically make money by people clicking on ads and advertising period for those clicks. So Pinterest is in this orange line, and we saw this stock was crazy. I mean, we're talking wildly overvalued when it was up over 20, even 30 times sales. In fact, it traded at a premium to Facebook at time and still does, quite frankly. Now, Snapchat is always traded at a premium. I thought that was ridiculous as well. When you look at that stock price, it has come down. Twitter as well has always kind of lagged this market to a certain degree. They are bringing up the rear in terms of price to sales. Right now at the current time, Facebook is trading about 8 times sales. That might not include yesterday's earnings report. Pinterest trading at about 7 times. My guess is that also doesn't count today's earnings. But all things being considered, all of these companies are starting to converge. You notice that for a while there, they weren't together. Now they're all converging at that 7x sales. So we can start to realize that, yeah, maybe that's the multiple we pay. And then we can start paying attention to kind of the growth rate over at these stocks. And then we can also pay attention to this from a technical perspective as well. The fact that this stock is down over 68% and has pulled back to areas that, quite frankly, we had not seen in several years over at Pinterest, that could create a buying opportunity as well. But what we want to do is make sure, if we're going to invest in a silver or bronze medalist when it comes to a sector, the financials have got to back it up. And let's take a look at Pinterest over here. So we've got our 3 months ended here. We've got our revenue coming in at that 846, like we talked about, 20% over last year at 705. For the full year, seeing a similar type story. You went from 1.7 up to this 2.5. All things have been considered really, really solid. Now, unfortunately for Pinterest is we're not scaling up our costs and expenses. Take a look at our total costs and expenses over at Pinterest. Went from 500 million up to $667 million. In fact, that exceeded our revenue growth to a certain degree because you see our income from operations actually dropped. So despite the 20% growth up here, we talked about how they grew their ARPU across the board, globally 23%, internationally 62%, but unfortunately, take a look at our income from operations, went down from 205 to 179 because we did not do necessarily a great job controlling cost over at Pinterest. But for the full year, paints a beautiful story over 2020. We actually lost money, $142 million last year. The fact is, this company has actually been consistently profitable over the last few quarters. We're up to $326 million. So isn't that a little bit funny how these markets work? Again, you've got to take everything in totality, because last year at this time, in December of 2020, the company actually lost $142 million, but the stock was actually way up here at $65 per share. The company has delivered nicely on the revenue growth side and generating profits, and now the stock is all the way down here to 29. That's what gets us excited as investors, because you had people clearly overpaying for this stock, and they've basically been burnt on it, and it can create opportunities. Come down to net income, paints a similar type story after we pay income taxes and whatnot over at Pinterest. Now, from a cash flow perspective, paints an even better story. We pull down this net income number for the year end of 316 million. Last year, we lost 128. I'll remind you, last year we lost 128 million, and we were sitting up here at $65 per share. Now we had positive net income of 316. Take a look at this. After we add back in a hefty amount of stock-based compensation, this is what I still don't like about Pinterest, and what would make it kind of a positive, or at least an interesting acquisition target for some companies out there. Because take a look at this, off of $316 million worth of net income, and quite frankly, when we look at the full year, $2.5 billion worth of revenue, look how much stock-based compensation they had. It actually exceeded their net income of $415 million. Last year, it was at $321 million. That's why it makes an interesting acquisition target, because you could shed some of this stock-based compensation that this company does. Now, I know this is non-cash. It's not necessarily hurting the company from a cash flow perspective, but it could be interesting from a takeout perspective, because you could get rid of some of these high-priced executives that are clearly making a ton of money off of this stock. It also could clean up some of the selling pressure that you've seen with this stock. It could also explain a lot of the selling pressure with this stock, because I'm sure a large portion of these shares that are getting awarded to people are being put and brought into the market and creating selling pressure on this stock. Now, you add back that in and some other stuff, and look at your cash flows over here. Whoa, $752 million worth of cash flow off of $316 million worth of net income. This is a company that's really generating quite a bit of cash flow, okay? The fact that we've got a $19 billion valuation on this one, obviously it's going to go up a little bit tomorrow, although this number might not adjust day to day. It might be about the same. We'll call this about a $25 billion company. To have almost nearly $750 million of positive cash flow in a year, not that bad. And again, as we see from a price to sales basis, it's not wildly overvalued, especially when you compare it to its peers. Everything else with this company, not a whole lot going on. When you look at the balance sheet, it paints an even better story, okay? We've got over $2 billion worth of cash. In terms of total assets, we've got $3.5 billion. Nearly almost all of that is in cash or accounts receivable. So you could take this $3 billion and actually minus it off of the market cap of the company, because if you bought this company, you would essentially be buying this $3 billion billion in cash. So you'd get about a $3 billion discount on this valuation as well, because when you come down here to liabilities, they basically have no liabilities, okay? Yeah, they've got some accounts payables and some operating leases, but that's it. They got $500 million worth of liabilities. I mean, that's nothing. That's a rounding error if you were to buy this company. So I could see how this could be an interesting takeout target. Now, just because Pinterest might get bought out or could be bought out, some of the things kind of complicate that is the regulatory environment. I don't necessarily see Facebook being able to buy this. Google certainly wouldn't be able to buy it. And certainly some of the smaller social media sites like a Twitter or Snapchat couldn't really probably leverage up their balance sheet to actually buy this. So I don't exactly know who would step in and want to get this one, but it could be interesting from that perspective. A Microsoft maybe could make a play on this one. There's certainly other companies out there that could want to make a play. We saw that PayPal was rumored to want to buy this stock. Now, we are down here. Like we talked about, we had this massive 68% drop. In fact, peak to trough, it was much closer to 70% drop from the highs. Now, it looks like we reached an area of support. I had this area marked out because after this stock went IPO, it actually acted as a level of support. That was down here at $25 per share. It was a comfortable spot for this stock to rest because we did fill this gap technically. And now we're looking on the way up. We do have some resistance up here at about $36 per share. That's $6 to $7 higher than where the stock is. That's where it peaked at shortly after its IPO. Same just a few months in. This stock reported earnings back in 2020 and it kind of rocketed up to this $36 level and hesitated there for a minute. But the other reason why you know this is such a key technical level is once you got above $36, it went to like $80 or $90 per share. So once you cleared this level, boy, buyers just stepped in and sellers just completely dried up. We're down towards the bottom end of the range. If you zoom in on the price action here, it looks like we're creating a slight reversal pattern. Okay. Yes, it has happened many, many times with Pinterest over the past few months, and the stock has just continued to go down. In fact, it had a giant reversal, it looked like here, only to gap down and continue to go lower. So I'm not going to step out and buy Pinterest tomorrow or anytime soon. Me personally, I would get excited on this one actually if we got back above the $36 range. I'd like to see a candle, potentially 2 candles above that. That would signal that now this $36 level will act as an area of support. If we buy it above this level, we could put a stop loss just underneath that, maybe at $34, $35 per share, somewhere down here, just in case we're wrong. This stock has pump faked numerous times. We'd like to get, I think, above that cluster of highs, and that would signify that yes, we probably have bottomed here and the stock could continue to go up. And again, we could be supported by the fact there could be rumors to take out Pinterest, and that could surge the stock price up to a buyout price. I would only buy Pinterest for kind of a swing trade or a shorter term. I still would focus the vast majority of your portfolio, your long-term wealth building on the gold medal winning stocks. But however, when you find a company that has turned profitable, has very significant cash flows, this company has very significant cash flows on a yearly basis, and it looks like that is likely to continue because this wasn't the easiest quarter for them. They saw bleeding out of these monthly active users, but they did a nice job finding advertisers to advertise against them at an increasing rate. I do like this company, what they are doing, but in my opinion, this goes into your short-term speculative trade portfolio. If you don't have that, it's not something I would necessarily start today or tomorrow with Pinterest. But if you are somebody with a retirement portfolio, you've got a large portion of your wealth set aside, and maybe you've got a little bit of fun money on the side that you like to trade and experiment with, well, Pinterest could be interesting, but I would be patient on this one. Make sure it shows you that these lows are confirmed. We get above another area of resistance here because it's actually a high probability we walk all the way back up here to 35 only to be rejected and likely retest this $26 level. That's why I'd be looking for a break above that level. That will signify that sellers have dried up to a certain degree. And boy, we've got a lot of airspace above this one if we can get it moving in the positive direction. That was Pinterest. Hopefully you guys enjoyed this video. Back again soon with more. Good luck with your investments.